Welcome. In 5 minutes, we'll explain how bank mergers and acquisitions work and why a rule called the Danish Compromise matters in Europe. Bank M&A. In 50 seconds, no jargon, on screen. 3 boxes. Capital, risk-weighted assets, shareholders, voiceover. When a bank buys a business, it must keep enough capital compared to its risk-weighted assets. That's what regulators check. The key ratio is set 1, capital, divided by RWA, risk-weighted assets. If a deal uses up too much capital, the bank may have to raise shares or slow distributions, which can upset shareholders. This is why structure, cash versus shares, and regulatory treatment often decide whether a deal flies or dies. The Danish Compromise, plain English version, on screen. 2 buckets animation. Deduct, BS, risk weight, voiceover. By default, if a bank owns an insurance subsidiary, the strict approach would be to deduct that stake from set 1. The deduct bucket lowers the numerator of the ratio. The Danish Compromise, Article 49 of the EU Capital Requirements Regulation, lets qualifying financial conglomerates, bank plus insurer groups, risk weight that insurance stake inside RWA instead of fully deducting it. That usually means a smaller hit to the CET1 ratio and makes owning insurance more feasible for banks. On screen. 2025 update. CRR3 down pointing arrow risk weight, voiceover. From January 2025, the EU's CRR3 reform reconfirmed the Danish Compromise and lowered the standard risk weight for insurance participations to approximately 250%, down from approximately 370% historically. In short, same rule, now more capital friendly, which is why you hear more about bancassurance deals lately. One real, clean example. What good looks like. Example. BNP Paribas Cardiff acquires AXA Investment Managers, AXAIM, on screen. Logos right pointing arrow headline. Acquisition completed, 2025, voiceover. In 2025, BNP Paribas Cardiff, the insurance arm of BNP Paribas, completed the acquisition of AXA Investment Managers, AXAIM. The transaction value disclosed by AXA was about €5.1 billion cash proceeds to AXA as part of a €5.4 billion overall package, along with a long-term partnership for BNP Paribas to manage a large part of AXA's assets. The combination created a top European platform with around €1.5 trillion in assets under management. Why this fits the spirit of the Danish Compromise. It's insurance-anchored expansion within a bancassurance group, a setup that the Article 49 framework was designed to recognize, risk-weighting insurance holdings rather than deducting them outright. With CRR3 in force from 2025, the 250% risk weight calibration generally makes this type of insurance-centered growth more capital efficient than before. Where the line is, what not to assume, on screen. Don't overgeneralize, voiceover. A common misunderstanding is to apply the Danish Compromise beyond insurance businesses. Supervisors have clarified 2 important points. Case by case. The ECB has said the favorable treatment for insurance holdings is assessed case by case. It's not an automatic free pass. Asset managers does not equal insurers. EBAQ and AMP. And subsequent commentary indicate you shouldn't assume the compromise gives the same capital relief if an insurance subsidiary buys an asset manager. Goodwill, intangibles may still be deducted at group level. In other words, check the perimeter, asset management acquisitions don't automatically benefit like insurance stakes do. Wrap up. 3 messages for students on screen. 1, 2, 3 list voiceover. Regulation shapes strategy. Banks don't chase deals only for synergy slides. They model CET1 under Article 49, CRR3 to see if the capital math works. Bancassurance got a lift. With CRR3's 250% risk weight for qualifying insurance participations, owning insurers, and building from them, is structurally easier than before. Know the boundary. Don't assume Danish Compromise applies to everything a group buys. Insurance is one thing. Asset managers are another. Ask supervisors early. On screen, final card, key terms. Set 1, RWA, CRR3, Article 49 inches plus. Further reading. EUOJ CRR3, EBA Single Rulebook. Voiceover. If you remember those 4 terms, you'll understand 80% of the headlines on European Bank M and AM.